Hey everyone. Hey Kara. What's up, Anna? Yeah, I'm trying to use my other mic. It's not working. I'm doing some. I haven't looked at American Express. I don't go on Hacker News too much. Hater News, one of my friends calls it. Hi everyone. We had a good
Good
quarter.
afternoon. My name is Dave, and I will be your
Today's press release, and
We had a pretty good quarter.
10-K filed with the SEC. Any forward-looking statements that we make on this call are based on assumptions as of today, and we undertake no obligation to update these statements as a result of new information or future events. During this call, we may present both GAAP and non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The press release and an accompanying investor presentation are available on our website at investor.fb.com. And now I'd like to turn the call over to Mark.
All right, thanks Deborah, and thanks everyone for joining. This was a good quarter, and we're seeing growing momentum in our products and business. Our community reached the milestone that now more than 3 billion people use at least one of our apps each day. Facebook also reached the milestone of 200 million daily actives in the US and Canada after last quarter reaching 2 billion daily actives worldwide. Now in a moment, I'll talk more about the results in our business and the opportunities that I'm excited about, but first I want to share an update on our efficiency work. The goals of our efficiency work are to make us a stronger technology company that builds better products faster, and to improve our financial performance to give us the space in a difficult environment to execute our ambitious long-term vision. When we started this work last year, our business wasn't performing as well as I wanted. But now we're increasingly doing this work from a position of strength. Even as our financial position improves, I continue to believe that slowing hiring, flattening our management structure, increasing the percent of our company that is technical, and more rigorously prioritizing projects will improve the speed and quality of our work. I also believe that a stronger financial position will enable us to weather a volatile environment while remaining focused on our longer-term priorities. So far, we've gone through 2 of the 3 waves of restructuring and layoffs that we have planned for this year in our recruiting and our technical groups. In May, we're going to carry out our 3rd wave across our business groups. And this has been a difficult process. But after this is done, I think we're going to have a much more stable environment for our employees. And then for the rest of the year, I expect us to focus on improving our distributed work model, delivering AI tools to improve productivity, and removing unnecessary processes across the company. Now moving on to our products and business, we're seeing strong engagement growth across our apps and good progress on monetization efficiency, which combine to drive good business results. Reels continues to grow quickly on both Facebook and Instagram. Reels also continue to become more social, with people resharing Reels more than 2 billion times every day, doubling over the last 6 months. Reels are also increasing overall app engagement, and we believe that we're gaining share in short-form video too. Now, a key theme that I want to discuss today is AI. I've emphasized for a number of these calls now that there are 2 major technological waves driving our roadmap: a huge AI wave today and a building metaverse wave for the future. And our AI work comes in two main areas. First, the massive recommendations and ranking infrastructure that powers all of our products, from feed to Reels to our ad system to our integrity systems, and that we've been working on for many, many years. And second, the new generative foundation models that are enabling entirely new classes of products and experiences. Our investment in recommendations and ranking systems has driven a lot of the results that we're seeing today across our discovery engine, Reels, and ads. Along with surfacing content from friends and family, now more than 20% of content in your Facebook and Instagram feed are recommended by AI from people, groups, or accounts that you don't follow. Across all of Instagram, that's about 40% of the content that you see. Since we launched Reels, AI recommendations have driven a more than 24% increase in time spent on Instagram. Our AI work is also improving monetization. Reels monetization efficiency is up over 30% on Instagram and over 40% on Facebook quarter over quarter. Daily revenue from Advantage Plus shopping campaigns is up 7x in the last 6 months. Our work to build out business messaging as the next pillar of our business is making progress too. I shared last quarter that click-to-message ads reached a $10 billion revenue run rate. And since then, the number of businesses using our other business messaging service, paid messaging on WhatsApp, has grown by 40% quarter over quarter. Our success here depends on delivering results for other businesses. And at our scale, that can have macroeconomic effects. We recently did a study with economists at UC Berkeley to understand the impact that our services make. And they concluded that every dollar spent on our ads drives on average $3.31 in revenues for our advertisers in the US. That means over $400 billion in economic activity annually is linked to supply chains relying on our platforms, supporting more than 3 million jobs. Beyond recommendations, the other major focus of our AI work is foundation models to enable a lot of new use cases, including generative AI. That's been a pretty amazing year of progress on this front, and the work happening now is going to impact every single one of our apps and services. And I'm incredibly excited to ship more of the things that we're building over the coming months. Now, I want to share a little bit about our approach and what you can expect to see from us. And the specifics are going to come into focus as we ship more of these things, so these are just themes for now. But first, for our products, we're always focused on connection and expression, and I expect that our AI work will reflect that. I think that there's an opportunity to introduce AI agents to billions of people in ways that will be useful and meaningful. We're exploring chat experiences in WhatsApp and Messenger, visual creation tools for posts in Facebook and Instagram, and ads, overtime video and multimodal experiences as well. I expect that these tools will be valuable for everyone from regular people to creators to businesses. For example, I expect that a lot of interest in AI agents for business messaging and customer support will come once we nail that experience. Now, over time, this will extend to our work on the metaverse too, where people will much more easily be able to create avatars, objects, worlds, and code to tie all of them together. All right, next, let's talk about the technology platform to enable this. Now, right now, most of the companies that are training large language models have business models that lead them to a closed approach to development. And I think that there's an important opportunity in the industry to help create an open ecosystem. And if we can help be a part of this, then much of the industry, I think, will standardize on using these open tools and help improve them further. So this will make it easier for other companies to integrate with our products and platforms as we enable more integrations, and that will help our products stay at the leading edge as well. Our approach to AI and our infrastructure has always been fairly open. We open source many of our state-of-the-art models so people can experiment and build with them. This quarter, we released our Llama LLM to researchers. It has 65 billion parameters, but outperforms larger models and has proven quite popular. We also open sourced 3 other groundbreaking visual models along with their training data and model weights, Segment Anything, Dino V2, and our animated drawings tool, and we've gotten some positive feedback on all of those as well.
You're just
Now,
a little
finally,
scruffy ball, huh?
let's talk about AI infrastructure and the
You were
CapEx.
gonna behave.
This has been a major investment.
Stop being a little kitten.
A couple of years
running
ago,
around.
I asked our infra
Being a
teams
wild
to put
beast.
together ambitious plans to build out enough capacity
Being
to
a wild
support
beast.
not only our existing products, but also enough buffer capacity for major new products as well. And this has been the main driver of our increased CapEx spending over the past couple of years. Now, at this point, we are no longer behind in building out our AI infrastructure. And to the contrary, we now have the capacity to do leading work in this space at scale. As these new models and use cases continue scaling, we're going to need to continue investing in infrastructure, although we'll have a better idea of the trajectory of that investment later in the year once we can gauge usage of some of the new products we'll launch. Now, beyond AI, the other major technology wave that we're focused on is the metaverse. A narrative has developed that we're somehow moving away from focusing on the metaverse vision, so I just want to say up front that that's not accurate. We've been focusing on both AI and the metaverse for years now, and we will continue to focus on both. The two areas are also related. Breakthrough in computer vision was what enabled us to ship the first standalone VR device. Mixed reality is built on a stack of AI technologies for understanding the physical world and blending it with digital objects. Being able to procedurally generate worlds will be important for delivering compelling experiences at scale. And our vision for AR glasses involves an AI-centric operating system that we think will be the basis for the next generation of computing. Metaverse technologies will also help deliver AI as well. For example, embodying AI agents will take advantage of the deep investment that we've made in avatars over the last several years. Building the metaverse is a long-term project, but the rationale for it remains the same, and we remain committed to it. Now, in the near term, we've reached a few milestones that I think are worth calling out. More than 1 billion meta avatars have now been created. Since last year, the number of titles in the Quest Store with at least $25 million in revenue has doubled, and more than half of Quest daily actives now spend more than an hour using their device. The next milestone is that we're gearing up to launch our next generation consumer virtual and mixed reality device later this year. We launched Quest 2 almost 3 years ago at this point. It was a very big step forward for VR, and I'm really excited to show the world all of the improvements and new technology that we have developed since then at a price point that will be accessible for lots of people. All right, so that's what I wanted to cover today. We're seeing good momentum in our products and business. We have incredibly exciting opportunities ahead in our family of apps, AI, and the metaverse. I'm confident that our efficiency work will improve our ability to execute on all of this. As always, I'm grateful for our teams for all of your work. I know that this has been a challenging period, but I'm proud of the work that you're doing. And I'm also grateful for all of you for being on this journey with us. And now, over to Susan.
Thanks, Mark, and good afternoon, everyone. Let's begin with our consolidated results. All comparisons are on a year-over-year basis unless otherwise noted. Q1 total revenue was $28.6 billion, up 3% or 6% on a constant currency basis. Had foreign exchange rates remained constant with Q1 of last year, total revenue would have been about $816 million higher. Q1 total expenses were $21.4 billion, up 10% compared to last year. In terms of the specific line items, cost of revenue increased 2%, driven by infrastructure-related costs that were partially offset by lower Reality Labs cost of goods sold. R&D increased 22%, driven primarily by restructuring charges related to facilities consolidation and severance expenses, and headcount-related costs from our Reality Labs and Family of Apps segments. Marketing and sales decreased 8%, due mainly to lower marketing spend and headcount-related expenses. And G&A increased 22%, due primarily to restructuring charges related to severance and facilities consolidation expenses and legal-related expenses. We ended the first quarter with over 77,100 employees, down 11% from the fourth quarter, as our reported headcount no longer includes substantially all of the employees impacted by the November layoff. employees that were impacted by layoffs in March are still included in the first quarter headcount. First quarter operating income was $7.2 billion, representing a 25% operating margin. Our tax rate for the quarter was 22%. Net income was $5.7 billion, or $2.20 per share. Capital expenditures, including principal payments on finance leases, were $7.1 billion, driven by investments in data centers, servers, and network infrastructure. Free cash flow was $6.9 billion, and we repurchased $9.2 billion of our Class A common stock in the first quarter. We ended the quarter with $37.4 billion in cash and marketable securities. Moving now to our segment results. I'll begin with our Family of Apps segment. Our community across the Family of Apps continues to grow. For the first time, we surpassed 3 billion people using at least one of our Family of Apps on a daily basis in March, and approximately 3.8 billion people use at least one on a monthly basis. Facebook continues to grow globally as well, and engagement remains strong, with DAU and MAU growing sequentially across all regions in the first quarter. Facebook daily active users were 2.04 billion, up 4% or 77 million compared to last year. DAUs represented approximately 68% of the 2.99 billion monthly active users in March. MAUs grew by 53 million or 2% compared to last year. Q1 total Family of Apps revenue was $28.3 billion, up 4% year over year. And Q1 Family of Apps ad revenue was $28.1 billion, up 4% or 7% on a constant currency basis. Within ad revenue, the online commerce vertical is the largest contributor to year-over-year growth, followed by healthcare and entertainment and media. Online commerce benefited from strong spend among advertisers in China reaching customers in other markets. However, other verticals remain challenged, with financial services and technology verticals being the largest negative contributors to year-over-year growth. On a user geography basis, ad revenue growth was strongest in rest of world at 9%, followed by North America and Asia Pacific at 6% and 4% respectively. Europe declined 1%. Foreign currency remained a headwind to advertising revenue growth in all international regions. In Q1, the total number of ad impressions served across our services increased 26%, and the average price per ad decreased 17%. Impression growth was primarily driven by Asia Pacific and rest of world. The year-over-year decline in pricing was primarily driven by strong impression growth, especially from lower monetizing surfaces and regions, foreign currency depreciation, and lower advertising demand. While overall pricing remains under pressure from these factors, we believe our ongoing improvements to ad targeting and measurement are continuing to drive improved results for advertisers. Family of Apps other revenue was $205 million in Q1, down 5%, as strong business messaging revenue growth from our WhatsApp business platform was more than offset by a decline in other line items. We continue to direct the majority of our investments toward the development and operation of our Family of Apps. In Q1, Family of Apps expenses were $17.1 billion, representing approximately 80% of our overall expenses. Family of Apps expenses were up 9% due primarily to restructuring charges and growth in infrastructure-related costs. Family of Apps operating income was $11.2 billion, representing a 40% operating margin. Within our Reality Labs segment, Q1 revenue was $339 million, down 51% due to lower Quest 2 sales. Reality Labs expenses were $4.3 billion, up 18% due mostly to employee-related costs and restructuring charges. Reality Labs operating loss was $4 billion. Next, I'll discuss our ongoing monetization work. As I mentioned last quarter, there are two primary levers to increasing monetization: growing supply and demand. On the ad supply side, our foremost focus remains on building engaging experiences for our community, and we're continuing to make encouraging progress on our product priorities. Our investments in the discovery engine are delivering results. In-feed recommendations are contributing to engagement, and we've seen Reels time become more incremental to overall engagement on our services as we continue to improve our recommendation system. This is an important signal because it demonstrates that people are finding added value from the content we're helping them discover. Beyond that, we continue to focus on further narrowing the gap in monetization efficiency, or monetization per time, between Reels and our more mature surfaces, Feed and Stories. There are structural supply constraints with the Reels format as people view a Reel for a longer time than a piece of Feed or Stories content, which results in fewer opportunities to serve ads in between posts. That will make it likely more challenging to close the monetization efficiency gap than it was with Stories. However, the overall economics of Reels will be determined by a combination of our ability to continue growing monetization per time on Reels and our ability to drive incremental engagement from Reels. As Mark noted, we have seen a 24% increase in overall time spent on Instagram from our ranking improvements since launching Reels globally. We continue to expect that Reels will become neutral to overall revenue by end of this year or early next year. The other side of monetization is growing advertiser demand. One area of focus is around driving advertiser performance, and we are seeing continued strong conversion growth for advertisers, which we believe, coupled with lower cost per action, is driving higher return on investment. We remain focused on continuing to improve ads ranking and measurement with our ongoing AI investments, while also leveraging AI to power increased automation for advertisers through products like Advantage Plus Shopping, which continues to gain adoption and receive positive feedback from advertisers. These investments will help us develop and deploy privacy-enhancing technologies and build new innovative tools that make it easier for businesses to not only find the right audience for their ad, but also optimize and eventually develop their ad creative. Scaling on-site conversions is another important part of our work, and click-to-message ads continue to grow and bring incremental demand onto our platform. This format is mostly used by smaller advertisers today in Southeast Asia and Latin America, and one of the exciting opportunities ahead is to expand adoption to larger advertisers in more markets by investing in increased automation and reporting to help businesses more easily manage messages and measure results at scale. Before turning to our revenue outlook, I'd also like to talk about our operating philosophy given the recent significant changes to our investment plans. We believe increasing our organizational efficiency is vital to our long-term success. This will increase the speed of our execution and agility to ensure that we are constantly innovating for the people who use our services. Narrowing the scope of the projects that we are working on allows us to increase our focus on the highest leverage opportunities for the company, including AI today and the metaverse longer term. It also enables us to invest in these areas while maintaining a strong financial position.
All right, quantizing.
As we look forward,
I also expect
that we will modestly evolve our capital structure over time to improve our overall cost of capital. We expect to do so through periodically accessing the debt markets to diversify our funding sources while still maintaining a positive or neutral net cash balance over time. In addition, we continue to monitor ongoing regulatory developments. We expect the IDPC to issue a decision in May in its previously disclosed inquiry relating to transatlantic data transfers of Facebook EU EEA user data, including a suspension order for such transfers and a fine. Our ongoing consultations with policymakers on both sides of the Atlantic continue to indicate that the proposed new EU-US data privacy framework will be fully implemented before the deadline for suspension of such transfers, but we cannot exclude the possibility that it will not be completed in time. We will also evaluate whether and to what extent the IDPC decision could otherwise impact our data processing operations even after a new data privacy framework is in force. Turning now
Oh,
to the
these are
revenue
the
outlook.
error
We
functions.
expect
error
second
amounts, I
quarter
see.
2023 total revenue to be in the range of $29.5 to $32 billion. Our guidance assumes foreign currency headwinds will be less than 1% to year-over-year total revenue growth in the second quarter based on current exchange rates. Turning now to the expense outlook. We anticipate our full year 2023 total expenses will be in the range of $86 to $90 billion, updated from our prior outlook provided in March. This outlook includes $3 to $5 billion of restructuring costs related to facilities consolidation charges and severance and other personnel costs. We continue to expect Reality Labs operating losses to increase year over year in 2023. Turning now to the CapEx outlook. We expect capital expenditures to be in the range of $30 to $33 billion, unchanged from our prior estimate. This outlook reflects our ongoing build-out of AI capacity to support ads, feeds, and reels, along with an increased investment in capacity for our generative AI initiatives. On to tax. Absent any changes to U.S. tax law, we expect our full year 2023 tax rate percentage to be around 20%. In closing, Q1 was a solid quarter for our business. Our global community continued to grow. We made important progress on our company priorities and improved the efficiency of our operations while strengthening the financial position of the company, which sets us up well to execute on the opportunities ahead. With that, Dave, let's open up the call for questions.
Thank you very much. We will now open the lines for a question and answer session. To ask a question, press 1 followed by the number 4 on your touch-tone phone. Please pick up your handset before asking your question to ensure clarity. If you're streaming today's call, please mute your computer speakers. Your first question comes from the line of Brian Nowak with Morgan Stanley. Your line is open.
Thanks for taking my questions. I have two, one for Mark, one for Susan. Mark, first one for you is on generative AI and how you think about generative AI and some of the vision models and your large language models potentially impacting your long-term advertising business and finding ways to deliver more value for advertisers over the next 2, 3, 5 years. How do you see Gen AI impacting advertising? Then the second one for Susan, just on as we're thinking about hiring expectations for 24 and beyond, I think there's been some ink in the press about, potential 1 to 2% hiring going forward. Can you just talk to us about that a little bit, and how does using AI internally factor in your thoughts about long-term hiring? Thanks.
Yeah, I can start off by taking the generative AI question, although there aren't that many details that I'm going to share at this point. More of this will come in focus as we start shipping more of these things over the coming months. But I do think that there's a big opportunity here. You asked specifically about advertisers, but I think it's going to also help create more engaging experiences, which should create more engagement, and that by itself creates more opportunities for advertisers. But then I think that there's a bunch of opportunities on the visual side to help advertisers create different creative. We don't have the tools to do that, over time, eventually making it so we've always strived to just have an advertiser just be able to tell us what their objective is and then have us be able to do as much of the work as possible for them. And now being able to do more of the creative work there and ourselves for those who want that, I think could be a very exciting opportunity. I also think that there's going to be a very interesting convergence between some of the AI agents and messaging and business messaging, where right now we see a lot of the places where business messaging is most successful are places where a lot of businesses can afford to basically have people answering a lot of questions for people and engaging with them in chat. And obviously once you light up the ability for tens of millions of small businesses to have AI agents acting on their behalf, you'll have way more businesses that can afford to have someone engaging in chat with customers. I think that could be a pretty big opportunity too. So those are just a few of the things that we're looking at. I think this is very broad. Like I said, I think this is literally going to touch every single one of our products and services in multiple ways. And this is just a very big wave and new set of technologies that's available, and we're working on it across the whole company.
Hi, Brian. It's Susan. Thanks for the question. You were asking about the 1 to 2% headcount growth stat that's been out there, and I thought it was worth clarifying. So that comes from something Mark mentioned in a recent internal employee Q&A that he had expected company headcount to increase only 1 to 2% year over year. And I want to clarify that Mark was actually speaking to employees about headcount budgets that have already been allocated. What we've also said previously is we have been in a broad-based hiring freeze for the last half year. And as we complete our layoffs in April and May, we will resume hiring, and we would expect headcount growth in excess of 1 to 2% in 2024 as a result, as we ramp up those recruiting pipelines. But our long-term focus is very much on efficiency, and as hiring resumes, you'll find the biggest areas that we are hiring in will be to support priority areas like generative AI, ads, infrastructure, reality labs, some of the areas that we've been talking about. And you also asked about using AI internally and how that factors into our thoughts on long-term hiring. You know, we certainly don't have enough visibility yet into how AI will make our workforce more productive, but it's something we're excited about, and I think we will have more clarity on that as more tools begin getting developed to enhance employee productivity across the industry.
Your next question comes from the line of Eric Sheridan with Goldman Sachs.
Hey, I know
Your
Eric.
line is open.
I used to work with him.
Thanks so much for taking the questions. Maybe two if I can. Mark, I was intrigued by your comment about open source and open systems with respect to AI. You know, obviously we're coming off of Web 2 and mobile where there were a lot more walled gardens and ecosystems. Can you talk a little bit about what you might want to try to do either from a priority or an investment standpoint to be a driver of more open-ended systems in AI compared to what we saw with Web 2? And then maybe for Susan, you introduced the concept last quarter about revisiting your data center architecture over the medium to long term. Is there any update there for us in terms of how to think about AI as a driver of data center architecture medium to long term and what that might mean for capital intensity? Thanks so much.
Yeah, I can take the first one. I think that there's an important distinction between the products we offer and a lot of the technical infrastructure, especially the software that we write to support that. And historically, you know, whether it's the Open Compute project that we've done or just open sourcing a lot of the infrastructure that we've built,
React.
We've historically open sourced a lot of that infrastructure, even though the products themselves are obviously,
Eric doesn't know that.
We haven't open sourced the code for, you know, our core products or anything like that. And the reason why I think why we do this
Zuck's
is that,
mansplaining right now.
you know, unlike some of the other companies in the
He's
space,
Zucksplaining.
you know, we're not selling a cloud computing service where we try to keep the different software infrastructure that we're building proprietary. For us, it's way better if the industry standardizes on the basic tools that we're using, and therefore we can benefit from the improvements that others make, and others' use of those tools can, in some cases like Open Compute, drive down the costs of those things, which make our business more efficient too. So I think to some degree we're just playing a different game on the infrastructure than companies like Google or Microsoft or Amazon, and that creates different incentives for us. So overall, you know, I think that's going to lead us to do more work in terms of open sourcing some of the lower level models and tools. But of course, a lot of the product work itself is going to be specific and integrated with the things that we do. So it's not that everything we do is going to be open. Obviously, a bunch of this needs to be developed in a way that creates unique value for our products. But I think in terms of the basic models, I would expect us to be pushing and helping to build out an open ecosystem here, which I think is something that's going to be important.
Hi, Eric. So I think your question had two parts. The first was an update on the data center architecture that we announced last quarter. And, you know, we're progressing with construction there, but the new data centers that we're building are intended really for future year capacity, so they won't come online for a few years. So we don't have too much more to share there, except that work is ongoing. And the second part of your question was really, I think, about how AI might drive capital intensity over the next few years. So, you know, you can really think about our CapEx investment as having three broad buckets. The first we've talked about before, non-AI compute needs. We do have ongoing general compute and storage needs to support the existing business, but this is an area where we've become much more efficient in terms of capital intensity and are very much focused on continuing to do so over time.
Hey, Samuraizu,
The
what's up,
second
man?
area is in our core AI investments, which is really most of our AI investment today, and that's supporting the building of the discovery engine, ranking unconnected organic content, ranking ads, and we're focused on measuring the return of those investments and making sure that we feel good about the ROI of our spend there. And
It's a special occasion. The great Samuraizu is here. What's up, man? Yeah, I'm just learning this phaser tool. I'm quantizing this LLM. Have you heard this term, LLM ops? Yeah, my man! How's the family? Hope the new baby's doing good. LLM ops is hell. Jason just went to freaking the gym, taking his break. We raised a bunch of money. We raised like $2 million, which is what we asked for. We have like 4 billionaires who are investors of ours. That's pretty cool. A couple of VCs. What else? So yeah, like we actually have to start hiring. We really need people who like know LLM ops, because LLM ops are like, yeah. But this Dr. Gupta product is our, I think, gonna be our main product. We got a lot of traffic. It's basically an AI physician chatbot, so you can ask it like, will my arthritis get worse over time, or is there a chance that it might go away on its own? It's weird because I said I have rheumatoid arthritis, which is a very different thing than regular arthritis. Anyway, why not just Bootstrap? I don't have rheumatoid arthritis. That's weird. Well, anyway, the point of this is you talk to it, and it sort of gives you like this very high quality conversation. We have this new, we're just about to push it to production, this new tool that actually gives you medical references from clinical journals, clinical scholastic publications, like on PubMed, so that'll come up in here. It'll be really cool. Sarah's actually making a fun animation where Dr. Goop is like picking different papers out of a library. It's pretty sweet. Yeah, please go to drgupta.ai. Yes, Gupta's bookshelf. But anyway, the big trick to a lot of this stuff is these LLM tools like Alpaca and platforms like Hugging Face, but Alpaca, Llama, which is Facebook's leaked weight system. There's going to be some open source weights for sure, some big open source models coming soon. How do you fine tune those? You have to quantize these things, fine tune, then quantize, then run inference. It's all big, it's just a bunch of work. It's really annoying. Yeah, I go to drgupta.ai. Definitely not malware. I don't think you can have malware on the internet browsers anymore. Most of those holes have been plugged. Yeah, Angel, what's up? I hate it when people like and work really hard on something and like even people who are my friends are like sarcastic about it or something. I'm like, yo, not everybody knows you're being sarcastic. Yeah, we can add clearing the conversations. You know, we don't look at anybody's conversations, obviously. But we're gonna sort of try to do that as well. Yeah, I banned Mo for doing that. Or not banned, but kicked Mo for doing that because it was like, what the fuck? Are you my friend or not? Like, I just put the Gupta link out, and she was like, I don't know what she said, but it was annoying. It was like, don't click that or something. And I'm like, bitch, I'm trying to fucking drum up some interest for this thing me and like 6 people have been working around the clock on, and you're saying that, like, I mean, we rely on this like reflection model. So thankfully the thing is so popular, like one person's comments don't make a difference, but yeah, I'm amazed at the traffic we're getting. It's enormous. And we don't really have any features yet. We're gonna add a ton of features. Yeah, I think there's just people that don't have like a good sense for like their own things, what their things are talking about. Just like what the impact their words would have. Sorry, that was like mental diarrhea. Anyways. I don't think it's much of a hate thing, but just like not contextual, understanding the context of your own actions and like stuff like that. I have all these Google ads. They're very unproductive. I want Instagram ads. Launch has been great, yeah. Surprisingly smooth. We had a couple of errors. We had some errors and issues out of the gate, but we cleaned those up pretty quickly. But yeah, this is just the beginning. We have a lot more coming. And of course, we're still doing Godel. So that's another product for us, and DrugLike. I just started DrugLike ads. We never advertised DrugLike, so it's just such a small market.
And that really will drive our future plans in terms of that core AI spend. And then the third bucket is really around...
yeah, I'd love to visit Texas. My partner Jason's out there. And what's up, Pseudo? Lex Friedman's out there. I have to go see him. So... I'm going to Houston. I have some friends in, we might set up a small office in Houston. And then I have some friends in Austin. I don't go to Dallas too much anymore, but I like the city in general. Oh, nice. Yeah, Austin's the best. Oh, yeah, I'll have to go see Alex Jones too, I guess. I have a lot of friends in Austin. I love Florida. Trust me, when I do my tour, you guys, it's going to be lit. You have no clue. I'm going to start doing this podcast with my homie from prison. It's going to be like probably the most like extreme. Like some of you guys want the old Shkreli. Some of you guys want the smart Shkreli. Some of you guys want both. A lot of you guys don't want either. In which case, press Alt F4. But my homie from prison is named Poops. And he's going to be my co-host. So, it's going to be like a mix of Howard Stern, The Chappelle Show, all that stuff. That's going to be more of like a comedy thing. I love quantum computing. Yeah, and so we'll tour the U.S. I don't know when the podcast will start. Probably in the next month or two. There's a lot of planning that has to go into something like that. I don't like to do anything half-assed. Like if I'm gonna do it, it's gonna be good. It's gonna be like produced and good content and stuff like that. Not QCD, quantum computing. Yeah, discord.gg/Martin Shkreli. Sasha, no offense, but you sound boring. Doing a podcast requires a lot of excitement and energy and making people laugh. I'm not doing that right now, but if you wanted me to entertain you, entertain a room of like 1,000 people, I can do that. I've got the charisma. I'm the top fucking G. I drink water. Jason does actually, Samuraizu, you haven't heard this, but Jason does a fucking hilarious Andrew Tate impression. It's so fucking funny. Water. I actually can't live in Manhattan right now. It kind of sucks. What color is your Bugatti? You do karaoke? Oh, that's great. The hardest part about entertaining people, oh, I hate this opening, is, I hate that one too. Is D4 okay here? Oh, this is like the most brutal attack coming. Yeah, I have no clue how to fucking stop it either. All I know is I've gotten hosed in this opening a bunch of times. Oh, great. Love that. Inside information. No, I do not. Did they let you keep some? That's not how that works. I am fighting the Federal Trade Commission. That's a fun battle. Okay, what do I do here? You need a lot of energy for streaming, for sure. Bishop F4 coming. I gotta pay attention to this. Take, that's check. Okay. Can't play Bishop F4. Bishop F4 takes a check. No go. Castle? Can I castle? Do I really care about that C3 pawn? It actually is kind of in my way. Fuck it. Let's go. Bishop takes H3 might be coming. No, that wouldn't work for him. This is, I'm daring him to take on C3. What's my quantizing doing? It takes forever. Am I queen trapped? Am I fucked? Am I fucked? Oh, why don't I just, what am I doing? Is that like, is that gonna work for him? He gets the open H file, that's it? I can actually play rook. I could do so many things here. Oh yeah, this is good. Oh yeah, GG. Okay, another hanging piece. Maybe I'm fucked. Yeah, that's cool. Right? Can I check him somehow? Check. Oh, that doesn't work. Okay. This should be fine. Famous last words. Whoa. Brain fart. Brain fart. Oh my god. Whoops. Samurai Zoo. I'll DM you. Just outside of Manhattan. Fuck. I feel like such a jackass. And I've been gaining rating points. I'm trying to get to 1800 on light chess at least. Man, I just got fucked. Okay, D3 is best here. I gotta see what the fuck is this opening anyway. Petrov. Okay. Knight takes, D takes. Okay, now I play D3. I don't love that, but I guess D3 then G3 probably. Knight C3 is bad apparently. God forbid. Bishop C5. H3 I finally got right because I've been fucked in this opening before. Okay, Queen F3 I got right. Now what? D3 again? They really want me to defend this pawn. I ain't having that. Okay. Now I play D3. Now I'm up 4 fucking eval. I castle. I'm up. This is crazy. I got the whole game on. Okay. E5. This is what I missed apparently. E5 is the crushing move. I looked at E5 and I figured it didn't work after bishop takes E5. Oh. No, bishop takes E5. Bishop takes E5. What am I missing? E5. Bishop takes E5. Rook E1. Right? Stafford Gambit. This thing is real painful. Oh my god, look at the eval. From +6 to -18. Woo! That move cost everything. E5 was necessary to stop the queen from coming to the other side. Alright, let's play one more. Vinyechka. Oh, come on. This bullshit again. This time you lose. This time you lose. Easy lose. So easy lose. Oh, hey kitty. Yes, I love you. Oh, is this 5 + 5? 5 + 5? What the fuck is that? Bogus time control. Thought we were playing Blitz. Thought we were playing Blitz, kitty. What? Yeah, Mama's gone. Mama's out tonight. Just me and you, kitty. Just me and you. Oh yeah, I gotta start doing TikToks. They fumbled the bag. Pour one out for my old bank, Credit Suisse. Okay, we got these layers. Packing them layers. self-attention, transformer layers. Yeah, walls. I'm trying to quantize and then deploy for inference this fine-tuned LLM. Yeah, the same opening. Okay, free tempo. Want to play c3? I like that. Or knight c3. I like that too. Is gabapentin a good drug? It depends. Depends on what ails you. Ask Dr. Gupta. Hello? Hello? Zuckerberg, hello? Okay.
AI investment today, and that's supporting the building of the discovery engine, ranking unconnected organic content, ranking ads, and we're focused on measuring the return of those investments and making sure that we feel good about the ROI of our spend there, and that really will drive our future plans in terms of that core AI spend. And then the third bucket is really around CapEx investments now to support Gen AI. And this is an emerging opportunity for us. We're still in the beginning of stages of understanding the various applications and possible use cases. And I do think this may represent a significant investment opportunity for us.
Maybe they'll buy Midjourney.
That is earlier on the return curve relative to some of the other AI work that we've done. And it's a little too early to say how this is going to impact our overall capital intensity in the near term. So to the extent that we spend more on CapEx in the near future, I expect it mostly to be to power this work. But I want to emphasize that we remain focused overall on striking the right balance between building out the AI capacity we need and being efficient with our CapEx spend.
Your next question comes from the line of Mark Shmulik with Bernstein. Your line is open.
Mark who?
Yes, hi, a couple questions. Mark, this one's a bit more philosophical, but if we compare where Meta is today, kind of pre-IDFA, cookie deprecation type of world, how do you see the relative competitive position in digital advertising in light of all of these technical
I do think the
integrations
FTC would
and
try
AI
to stop
tools?
Midjourney, but
I
they
think the
couldn't
prevailing
really.
view was that privacy would level the playing field, but it certainly doesn't seem that way. And then second for Susan, I certainly appreciate the outlook on the revenue guidance. But in light of some of the commentary we've been hearing about U.S. consumers trading down, is there any additional color you can share about kind of where you're seeing strengths and weaknesses effectively quarter to date and beyond? Thank you.
Thanks, Mark. I can go ahead and take both of those. So your first question was about the post-ATT landscape and how we're positioned in terms of our ads business. We've talked really, a great deal, of course, about this over the last few years. We're making progress, certainly in mitigating the direct impact from ATT's platform changes. But this is really, I think, just the reality of the online advertising environment that we're in now. And we've invested across not only sort of the direct mitigations that we've talked about in the past, including things like Conversions API, but really I think now we're focused on improving ad performance in the current signals landscape with our investments both in increasing the volume of ads with on-site objectives, and then second of all with our AI investments that have really, I think, enhanced the performance of our ads as well as enabled us to introduce new tools and features for advertisers. So I think we're quite well positioned here in terms of on-site conversions. We have a lot of offerings that have been growing very well for us. I think we've talked a lot about click-to-messaging ads and what that has meant in terms of driving growth for our business and new business opportunities. Other formats that have been, I think, performing well in terms of on-site conversions are lead ads, shops ads. So there are different ad formats that we're working on there. And then we've just really been investing in using AI for a long time to improve our ad systems, including ranking, to improve our modeling and measurement, and to, again, support the introduction of new AI-powered tools and products. So, I think we feel quite good about our relative position. Again, this is just work that we've been doing for a long time that I think in conjunction with seeing some stabilization in the macro environment has enabled us to see that work pay off. And then your second question was about strengths and weaknesses in sort of the Q1 revenue performance as well as in our outlook. In terms of, the Q1 revenue performance and the acceleration relative to Q4, we certainly saw stronger demand, including the impact of lapping the Ukraine war, which began in Q1 of 2022. And in particular, we saw acceleration among advertisers in China targeting users in other markets,
Missed a good tactic.
which we believe was due in part to dropping shipping costs and easing COVID lockdowns for those advertisers. And then you've seen FX play a part there as well. Looking forward to Q2 and the back half of the year, it's certainly an easier compare there as there are tailwinds to year-over-year growth coming from lapping a weaker demand period. And then moving into the first full quarter in Q2 without Russia revenue in terms of the comparison relative to Q2 2022. And we certainly expect that currency is also going to be less of a headwind than it was in the first quarter. With that said, there's a broad range of expectations captured in our Q2 outlook, and it reflects that we feel it remains a volatile macro environment. The market has absorbed a lot of new developments over the last year with inflation, higher interest rates, banking instability, et cetera. And it's hard to have perfect visibility on how those dynamics will impact the broader economy and specifically the advertising markets, for Q2 and for the rest of the year. It also continues to be a challenging regulatory environment, so that's something that we're continuing to monitor closely. But on the other hand, we've been pleased with the performance we're delivering for advertisers and how those investments have paid off. Core engagement trends remain strong, and Reels is a revenue headwind today that we expect will become revenue neutral by the end of the year or early next year. Again, we expect FX will be a tailwind, and again, we're lapping relatively softer comps. So lots of puts and takes as we look beyond, as we look into Q2 and beyond.
Your next question comes from the line of Doug Anmuth with JP Morgan. Your line is open.
Thanks for taking the question. Susan, you've talked about the goal of building the muscle for long-term financial discipline. Just given the restructuring that we've seen across the business so far, how far along are you in building this muscle, and what gives you the confidence that it's durable and sustainable long-term, even in a better macro environment, especially given all the work ahead on AI and the metaverse?
Thanks, Doug. I think there are a couple components to this. A lot of this efficiency work that we've been undertaking, and especially this year, is driven not sort of by solely financial imperative, but really with the focus of increasing operational efficiency. So that's been, I think, one of the foremost goals, and a lot of the work has been architected around that. And that really includes more carefully scrutinizing roadmaps, winding down projects that are no longer, at the top of our priority list, reprioritizing investments. That's really a muscle that I think we have spent a lot of time building over the last, half year, and I expect that we will be carrying that discipline into the way that we assess our product roadmaps going forward. Similarly, I think a lot of the work that we've done around increasing operational efficiency, around making sure that we feel good about management spans and layers, and all, that work I think is also in service of making us a company that can build more and ship faster. And we would expect to sort of continue to make sure that we think our organizational posture is really, in service again of building and shipping product. And as we move forward, including out of the sort of the layoffs that we've been implementing and the direct restructuring work, we're going to continue focusing on efficiency work, including in other areas like helping developers build and ship quality products faster. We're going to be investing in tooling where we can to increase the velocity of product development. And we'll continue streamlining, cross-functional or processes that, might tax the development process or slow us down, and make sure that we're really focused on also increasing the quality and frequency of collaborative and in-person time to build, relationships across the organization and get things done faster. So, this is all, I expect this to all be very much ongoing for us in the years to come.
Your next question comes from the line of Justin Post with Bank of America Merrill Lynch. Your line is open.
Hi, thank you. This could be for Susan or Mark. I think really interesting stat on Instagram time you gave, but just wondering how you characterize the health of the Facebook user base and usage on the site. Obviously, DAUs went up to 68% this quarter. I think Asia was really strong. But what are you seeing there? And is there kind of a catch-up here where the Reels content could start really helping Facebook time spent as well, as you saw with Instagram? But just stepping out, I think there's an area that that usage could be flat or down. Just wondering what your thoughts are and what you're seeing on the core Facebook. Thank you.
Thanks, Justin. In terms of core Facebook, user growth, we've been pleased with growth of the community and the engagement trends that we've been seeing. In particular, I think in Q1, DAU growth benefited from strong product execution, but I should also note that Q1 is a seasonally strong engagement quarter for us, so that, has some benefit in terms of quarter-over-quarter growth. You mentioned sort of whether the work in Reels is driving incremental or is driving engagement in Facebook. And what I would say there is that more broadly, sort of the discovery engine work for us and the investments we've made ranking unconnected content, is expansive beyond Instagram, and I think is certainly a part of what is also driving growth on Facebook as well.
Your next question comes from the line of Youssef Squali with Truist Security. Your line is open.
Great, thank you. I have two questions. I guess relative to OPEX guide from Q3 of last year, the new guide at the midpoint implies something like $10 to $15 billion lower adjusted for the restructuring costs. How does this impact your expectations for growth well beyond 2022? I'm not talking about this year. I'm just talking about the next, say, 2 to 3 years. Is it trying to get a sense of, is it all about efficiency, or are we potentially cutting into the bone? And then on the regulatory front, can you just help explain how changes to the transatlantic data transfer rules may impact your European business as it goes into effect? Just trying to get a sense if we have a potentially an IDFA situation with a signal loss here again. Thank you.
Yeah, Youssef, thank you. For your first question, how much sort of has the OPEX, the total expense guidance coming down, especially since we sort of issued our first pass of guidance in Q3 last year, how has that downward sort of trend impacted our expectations beyond 2022 in the next 2 or 3 years? We certainly haven't shared expense guidance for the out years, and frankly, that's something that, we are ourselves working on internally as we lay our long-term, as we undergo our long-term planning exercise. But I do think that a lot of the muscle that we're building with regard to efficiency is going to translate into the longer run roadmap. And so I expect that, we have really improved our cost structure over the last 6 months, and that's going to form the basis, along with an increased focus on operating efficiency going forward. I think that's going to form the basis for sort of our future outlook. And making sure that we are kind of constantly evaluating our investment roadmap to make sure that we are investing against the highest priority work and deprioritizing and winding down investments again where we don't see the ROI or we don't see a compelling opportunity. So again, we don't have guidance to share yet on the out years, but I do expect the overall efficiency ethos very much to be a part of the coming years. On your second question on what the potential impact to our European business is of the transatlantic data transfer rule. So first, I want to emphasize we continue to be hopeful that the new EU-US privacy framework will be implemented before a deadline for suspension. But if it comes to that, there's a lot that we don't know in terms of the specifics of a final order and how long a suspension order would last, which would be important variables in determining the overall impact. What we do know is that roughly 10% of worldwide ad revenue comes from ads delivered to Facebook users in EU countries. But there are more details that we would need to understand, including the impact on advertisers in EU countries, before we'd be able to really provide a more accurate or fulsome estimate of that impact.
Your next question comes from the line of Mark Mahaney with Evercore ISI. Your line is open.
Okay, thanks. 2 questions. Are there any restructuring charges still to be had, Susan, in Q2 or, beyond that $3 to $5 billion that you talked about? Did we pretty much see all of that in Q1? And then secondly, I wonder if I could just go back to the broader opportunity around click-to-message. Facebook has had these 2 wonderful assets, or there's 3 now, messaging assets, but really leading off with WhatsApp for quite some time. It's always sort of under-monetized versus some of the other leading assets, but that seems to have really started to change. The numbers are becoming material. You mentioned that there's a real power alley in terms of marketers in Latin America and Southeast Asia. How can you take what is really a differentiated product and really kind of blow it out more? Is there other steps you can take to really get more advertisers to realize the opportunity, just given the kind of cultural shifts, if you will, towards embracing messaging? Thank you very much.
Thanks, Mark. So on your first question about restructuring charges, Q1 restructuring charges are in the range of $1.1 billion, and then we gave a range of $3 to $5 billion for the full year. So we do expect that we will be recognizing further restructuring charges throughout the year. And then the second question about the sort of opportunity in click-to-messaging ads, and particularly in WhatsApp, what does the opportunity look like there? This is an area that we're very excited about. We've invested a lot. We see continued opportunity to scale click-to-message, particularly in WhatsApp and the click-to-Instagram direct area. Both of those are earlier on the growth curve. And we're investing in, a few areas to continue making it easier for people and businesses to connect. First, we're really investing in trying to make it easier to create ads. So in the last year, we've invested in a revamped experience in Ads Manager, native ad creation experiences directly in WhatsApp. We're also scaling partners. So with the cloud-hosted API, we now have hosted API solutions across WhatsApp, Messenger, and Instagram, so that our ecosystem of developers can help build good, best-in-class experiences for businesses. And then we're also working on making these ads more performant by driving more action further down funnel. So we're, working on ranking and optimization to yield better conversion from these ads and introduce new ways to drive outcomes. We've introduced new features like in-thread payments and other commerce tools. So we think that there's a big opportunity here. We're trying to make every part of the experience for advertisers easier, better, and more performant. And we're excited to also see growth beyond, the core markets here in Southeast Asia and Latin America, where messaging is already common as a way for businesses to engage with customers, and their customer prospects. But, we're hopeful that we'll see this also take off in other markets. We're seeing strong growth in the U.S. and Canada, but it's just earlier there today.
Your next question comes from the line of Ross Sandler with Barclays. Your line is open.
Hey, one more for Mark on the open sourcing of the models and infrastructure for generative AI. So do you view that as kind of an opportunity for developers to plug in to help ultimately improve engagement and revenue on your family of apps, or do you think there could be other kind of business models that come out of that, like APIs and other types of partnerships? Just any thoughts on that? And then second question is the back to the 24% increase in time spent on Instagram from Reels and content ranking, pretty incredible. So how much of that was like lost engagement from folks like TikTok that you're now recouping? And how do you think about how much more runway you have to increase that, or when you layer in the discovery engine across Blue and other apps as you're doing right now, is there some kind of benchmark you look at for increasing time spent? Is it 20%, 30%? Any thoughts on that? Thank you.
Sure, I'll take the first one, and then Susan can take the second one. On the AI tools, and we have a bunch of history here, right? So if you look at what we've done with PyTorch, for example, which has generally become the standard in the industry as a tool that a lot of folks who are building AI models and different things in that space use, it's generally been very valuable for us to provide that, because now all of the best developers across the industry are using tools that we're also using internally, so the tool chain is the same. So when they create some innovation, we can easily integrate it into the things that we're doing. When we improve something, it improves other products too. Because it's integrated with our technology stack, when there are opportunities to make integrations with products, it's much easier to make sure that developers and other folks are compatible with the things that we need and the way that our systems work. There are a lot of advantages, but I view this more as a kind of back-end infrastructure advantage with potential integrations on the product side, but one that should hopefully enable us to stay at the leading edge and integrate more broadly with the community, and also make the way we run all this infrastructure more efficient over time. There are a number of models. I just gave PyTorch as an example. Open Compute is another model that has worked really well for us in this way, both to incorporate both innovation and scale efficiency into our own infrastructure. So I think that our incentives, I think, are basically aligned towards moving in this direction. Now, that said, there's a lot to figure out, right? So you asked if there are going to be other opportunities. I hope so. I can't speak to what all those things might be now. This is all quite early in getting developed. The better we do with the foundational work, the more opportunities I think that will come and present themselves. So I think that that's all stuff that we need to figure out. But at least at the base level, I think we're generally incentivized to move in this direction, and we also need to figure out how to go in that direction over time. I mean, I mentioned Llama before, and I also want to be clear that while I'm talking about helping contribute to an open ecosystem, Llama is a model that we only really made available to researchers, and there's a lot of really good stuff that's happening there, but a lot of the work that we're doing, I think we would aspire to and hope to make even more open than that. So we'll need to figure out a way to do that.
And Ross, I think the second question. Oh, sorry. I think there was a second part to the question, which is really about Reels driving an increase in time spent on Instagram and how much runway we see. So, we certainly aren't quantifying, the kind of the expected engagement growth, but we're very pleased with what we've seen Reels drive in terms of incremental engagement to the platform so far. And we've talked about how the incrementality has grown over time, and that's important, as we've continued to improve ranking, because we're very focused not only on the absolute growth of Reels, but on increasing the incremental engagement, and that's something where we're very pleased with the trends that we've been seeing. As it comes to plays, watch time, reshares, reactions, all of the metrics that, we keep an eye on, we're seeing meaningful growth in Reels. It's clear that people value short-form video and recommendations. It's also unlocking an entirely new content pool, which we think creates an engagement opportunity as we help people discover more interesting posts. And then that's really valuable on top of the social graph, and we're seeing the sharing flywheel take off with the growth of Reels reshares. which has doubled over the last 6 months. And then more broadly, in terms of how the discovery engine is driving incremental engagement across the platform, our in-feed recommendations certainly go well beyond Reels. They cover all types of content, including text, images, links, group content, etc. And, on Facebook, we see that AI-driven recommendations are continuing to grow and contribute to increasing engagement, on the app. So, again, we're not quantifying this, but it's a place where I think we are both pleased with our progress and see significant opportunity for us to do better.
Operator, we have time for one last question.
Certainly, thank you. That will come from the line of Michael Nathanson with MoffettNathanson. Your line is open.
Thank you so much. I have two, if you can hear me. The first is, Susan, I appreciate the confidence about Reels monetization going forward, but can you share a bit, what's giving you that confidence that it goes from a headwind to neutral to a tailwind down the line? So anything you share on data points about ROAS or adoption? And then just quickly, all the updates on Messenger are really, great to hear. Do you think the adoption is also being driven by maybe loss of signal? And how does messaging improve marketers' ability to basically retarget post-IDFA? So anything on signal loss, how messaging helps you marketers regain that? Thanks.
Thanks, Michael. So on Reels, we have shared for, I think, a while now that we're working down the headwind to revenue from the growth of Reels cannibalizing some time that is spent on our more mature ad surfaces, Feed and Stories. And basically, we have been balancing the two factors here, which is the degree to which Reels is driving incremental engagement on the platform versus the lower monetization efficiency of Reels relative to the Feed and Stories engagement that it cannibalizes. And ultimately, the overall economics of Reels is really going to be determined by the combination of those two things. The thing that I would, so while we're on track to Reels becoming neutral to revenue by end of year, early next year, but I do think it's important to call out that Reels is structurally different from Feed and Stories, and so we don't have line of sight of getting Reels to monetization parity per time with Feed or Stories anytime soon because of those structural differences. But because it drives incremental engagement, we expect that we will continue, and we expect we will continue to improve its monetization from current levels. So we expect the combination of those things, will get us to revenue neutral by end of this year, early next, and positive to revenue beyond that, despite that it doesn't monetize as efficiently. The second part of your question was updates on messaging and how does messaging improve, marketer ability to retarget in face of signal loss. So click-to-messaging ads are a really important part of our overall ad strategy in terms of on-site objectives. And so it is a big part of the sort of first-party data playbook. And so I think, from that perspective, it really has, it is both sort of a first-party data ads format, which I think in a signal challenge landscape is important for us. And then, of course, it's a way for us to both monetize messaging behavior that's happening on our platform and create, robust avenues of communication for businesses directly with their consumers, which we hope to broaden, with broader business messaging offerings over time. So we're very excited. We're really excited with the progress that click-to-messaging ads have shown and, the business opportunity that we have going forward there.
Great. Thank you for joining us today. We appreciate your time, and we look forward to speaking with you again.
This concludes today's conference call. Thank you for joining us. You may now disconnect your line.
Jason Semi, the best joke, said we got to get on the conference call and ask Zuckerberg how to run Tortron. Quick question, Mark. Yes, this is Martin Shkreli from Goldman Sachs. Listen, I'm trying to run the llama weights, and is Jan LeCun on the phone by any chance? Can you get Jan in here? Mark Cuban doesn't have a drug company. Mark Cuban has a pharmacy company. Mark Cuban, I don't even know what to say about Mark Cuban. He's not the smartest guy in the world. Smartest guy in Shark Tank, I have no clue. That's not exactly a good sample set. Kevin? Who's Kevin? Cool Hand Poker, thanks for following me. Oh my god, look at the kitty! Hello! What? Oh, okay, I love you. She really doesn't enjoy this. Nibbles! 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 Nibbles wants to sit in her little chair. Sit next to me, yeah. Oh, you want some treats? I bet you want some treats. Is that what you want? Is that what you want? Server down. Oh, I stopped. Ooh, shit. Sorry. I stopped that instance. Fuck. Sorry about that, dog. I hope you weren't doing nothing. Right, kitty? We got frustrated. We just pressed the stop button. Oh well. Well, we didn't know somebody else was on there too. We messed up, kitty. Referral incentive scheme. Hey, Richard, what's up, man? I think that referral incentives is kind of like a murky area legally. So that's the only thing I'd point out. But I appreciate your support, obviously. My kitty, she appreciates it too. She appreciates it too. Nibbles. Alright, we'll give you a couple treats. We'll make it quick. Alright. You're being a good kitty all day. Look at you. Oh, you're so beautiful. Oh, you're so beautiful. Yes, you sure were. And she's wagging her tail. She knows what I'm saying. She knows. Aren't you so beautiful? I believe you are. You are. Shark bed. I got Nibbles a bed. She doesn't like it. You want shark bed? You want shark bed? You're just a little kitten. You're not even a big cat. You're a little cat. You're a kitten. You gotta be kidding me. Alright, I'll give you a couple treats. Maybe a couple. Are you hungry? There you go. Yeah. That's it? That's it? That's 5 treats. One more kitty. Yeah, right. Oh, no, where are you going? Oh, little stupid kitty. You're a little stupid kitty. It's okay. Cats aren't known for their brilliant intellect. Nibbles is a mighty hunter, though, I will say that. You're a mighty hunter, aren't you? Yes, you are. Broadcast.com, yeah. Nora is not smart. The constructor for our player class receives as argument the coordinates where the player character is placed on the map, okay? In that function, we store the coordinates, create, and store the cursor keys, store a reference to the sprite used for that character, and draw it on the map. Oh, shit. Yeah, medical billing is definitely weird space. Nibbles wants to go to sleep. We got a lot of cats in the crew. We got Nibbles, we got Trashy, who's the OG, we got Nora, that's Angel's cat. Who else we got? They all know each other, you know? They're all friends. Misha. Mozart, of course, the classic. It's a big crew of cats. Nibbles is in charge of the whole software company. If you're not using TypeScript, she comes and swats you. Whap. So what you doing? Whap. Despy, of course. The big man. Right? The capos. Talking about the cat crew. Nibbles, Trashy, Misha, Despy, Nora. Right? All hanging out, having a tuna party. Tuna party. Don't mind if I do. Tuna party. Nibbles, the cute little kitten. 3 months old? You're a baby. You just gotta have the litter. You're already a beast, but you're already a beast. I was running around the living room with Nibbles, and she was chasing me, and I was running. It was a little good exercise. Right, Nibbles? Yes. Why is your tail wagging so much, Nibbles? 3 months old. Maybe 4 now. She might be 4. She might be 4 months now. Look at that tail wagging. Woof. She's happy. Fortnite. Ooh, I want to play Fortnite. One game, quick game. I want to play. Did I uninstall it? Let's go. Haven't played this shiz in a while. Nibbles taking a bath. I'm hungry and I'm tired hungry than tired. Let's see what's in the cupboard. My girlfriend wants me eating healthy or whatever. I ain't doing that. Shit. I ain't doing that. Fuck out of here. I got this Red Bull. Check this shit out. Red Bull gives me wings. What you know about that? I should do push-ups, you're right. Red Bull, it gives you wings. You want to be as productive, as intelligent as me? Drink Red Bull. This is the first Red Bull I've had in a long time. Shit probably don't even work. Remember that time Charles Barkley tried to endorse, what the fuck was it called? Weight Watchers, and he was like, this shit don't work. He was a hot mic, he didn't realize what he was saying. Man, this shit don't work. I guess we lost that sponsorship. What is all this? On real easy. Solo. Battle Royale. Okay, 0 build. There we go. Let's go. Popcorn too. My girlfriend's away for 4 hours eating popcorn and Red Bull. That's my dinner. Let her try to talk some shit. Go ahead, try to talk some shit. Nah. Kind of remember how to play this, but not really. I'm probably gonna be awful. party, kitty. We got popcorn, Red Bull, Fortnite, streaming. It's a big party. Yeah, let's go. Someone's up in my video. Hey, what's up, Nibbles? Yeah, I got some popcorn. Yes, I do. Yes, I do. Let's fucking go. Should not break? Ooh, Chug Splash. Kitty, get out of my way. Psh, psh, psh. This fucking cat. It's gonna be the end of me. Come on, Kitty. You're in the way. Oh, damn it, Kitty. Over there. Can't play with you in my way. Stupid kitty. Anybody see any bad guys? I don't see anybody. Oh, footsteps. Let me get this shotgun real quick. Alrighty, that was easy. GG. Noobie noob. Shh, Monty noobs. I got my speakers up, let me see. Might be able to hear more things. Whoa, whoa. Heard somebody. I need like the sound. Oh, okay, there's like an NPC there, that's why there was sound. You can only figure these things out after you've, you know, played the game a little bit. You have to know the maps. Study them very carefully in my spare time. Some good shit right here. What is that? Heavy sniper rifle. Oh yeah. Need that. Now if I only had somebody to shoot. Oh, there's somebody behind me. There are they. I hear gunshots. Don't see nobody. I could be number one in the world if I wanted to at this game. It's too easy for me. I have to admit it. Whoa! Hey! Hey, buddy. Hey, buddy pal. Let me run up on you. G-Unit. Oh, hello. Bro! Come on, bullshit. I am a cat boy, it's true. Alright, that was enough. Looking like a snack. whole snack. Half a snack. That was a poor performance, I have to admit. Oh, hey, kitty. I'm eating popcorn. Health food. Yeah, some book about Phaser. Alright, let's fire it up. Oh, hey, look at that. Little guy there. This shit don't work. Supposed to be moving. That is not evil. We're connecting the world one person at a time, and even my cat Nibbles likes to use Facebook and our family of apps from time to time. She enjoys the Reels tool, actually. Facebook for Cats is our newest growth initiative. I can't tell Nibbles, I can't pet Nibbles when I want. She tells me when she wants it. She's kind of a beast. Oh shoot, Randa. Give Nibbles treats. No. We already gave her treats. We already gave her a lot. Right, you little monkey? Right, you little monkey? It's your lucky night. You are so lucky Zubu's here. The next cat gang member. We got Nibbles, Trashy, Zubu, Nora, Misha. Who else is in cat crew? Despy. And I'm missing one. Ringo. No, Mozart. Ringo's the dog. We don't like him. Right. I'm a little love. Where's my little love? Okay. You're so lucky Randa's is here. Randa. Zubu, aka Zubu's mama. You're my little Zubu too, you know that, right? You're my little Zubu as well. Yes. In fact, I got a little comb for you. We're gonna comb you. Yes, mama, I love you. Yes, I love you, kitty. Yes. A little grooming, yes. That's right, that's right. Okay, now some treats. We're gonna get Kitty Cam 2000 out for this one. It's a special occasion. Randa's here. Randa's here. So we got Kitty Cam 2000. That's right. Kitty Cam. Kitty Cam 2000. Kitty Cam. Action packed. Oh my God. 8 treats. 8. Count them, kitty. 8. Over here. They're over here, kitty. They're scrumptious. Yeah. That's right, you little baby. Over here. Yeah, you know what they are. Yeah, that's right there. One of them has catnip in it. Come on, mama. Yeah, no, not over there. Kitty Cam 2000. Oh yeah, there we go. Get the close up, get the close up. Nibbles, what's it like living with the farmer bro? Is he as mean as they say? Does he pinch your tail? Okay, okay. Did you lose a tooth, Nibbles? Is it back? Are you a good kitty? In general. What would you say? Are you a good kitty? We got exclusive footage of Nibbles. Get a photo, get a photo. What's with your paws, Nibbles? Why are some of your paws, knuckles white? And some of them are not. Let's get the close up, get the close up, get the close up. Alright, ask her about her litter. Do you miss your brothers and sisters from the litter? Is it true you were the runt? Is it true? Let's go follow her, follow her, follow her. I don't care about her privacy. Let's go, get the photo. Paparazzi. Nibbles. Nibbles, tell us what it's like. Does he cut your whiskers? What does he do? Tell us about mean Mr. Skrelly. Get the exclusive. New York Post wants to know. Why are you so skinny, Nibbles? Is he starving you? Exclusive photos of cat butt. Look at that butt. Oh my! What the heck are you doing, kitty? Started from the bottom, now we're here, eating treats. Taking bath. Oh, you dirty already? Are you going to sleep? She's going to sleep, so she wants to take a quick bath. You gotta meet Zubu, kitty. Zubu's another kitty. My dad used to call Zubu sometimes. What's up, Zubu? Hey, little Zubu. Hey, little Zubu. Yes, you are. Is that you? I think she sees herself in the... She said, alright, that's enough. Little Zubu. It's true. That's you right there. That's you. No, she's amazed. How is it me on the TV? It's me. dinosaur? What is that? The fuck? What the hell is that? Oh my god. Look over there. What is it? It's a kitty and a very handsome man. Look at that. Get it, kitty, get him. Get him. He's confused as hell. Little late. I know, kitty. You little bozo. Alright, kitty, why is this code not working, huh? What's going on with this code right now? Right meow. It's not working, my kitty. It's not connecting. Bingo and Nemo. Bingo talks to Nemo, kitty. Okay. Okay. Alright, this should be a disaster right here. Okay. At least we know that's running. That should run every 150 milliseconds, kitty. Right? Nothing QBasic about her. No JS. Kitty JS. Nibbles JS. Kibble JS. Kibble for nibbles? Yeah, kibbles for nibbles. I love you, Nibbles. I love you. I love you. I love you. Okay. Okay, whatever. You're a little ticked off, aren't you? Can you believe this guy? I'm just a kid. Trying to get some tuna. ATM.over. milliseconds. I think it's a cursor issue, maybe. Oh. Oh, I think, okay, maybe it's movement points. Rubble legs. Nibble's regular legs were good enough. Oh, okay. So movement points always seem to be 0. Now why? Ooh, that was out, kitty. Camera shy? Hey! What's up? What's up, little one? What's up, my little one? What's up with you? Miranda got you some treats. Are you happy? So thank you, Miranda. Thank you. Thank you very Good season. Any season. Kitty season. Now. You need to bring Zubu in your backpack. Hang out the side. Zubu and Nibbles connect. You're gonna link up. Whoa. Whoa, Kitty, heard what she said? Damn. My ear's going like that too. Yeah. Hello? What? Yeah, I tried to get a stray cat the other day. Like stray cats, they don't want to be home. They want to be out there romping around. Yes, my love. Yes, my love. I love you. Yes, I do. I love you. Yes, I do. I love you. Yes, I do. Num num num. Num num num. Yes, I do. I love you. Nibbles has gotten a lot of beauty sleep. Right, Nibbles? Right, Nibbles? Yes, you have. Yes, you have. What do you eat? You already got some treats. I already gave you treats. You're gonna be a fat cat soon. You're gonna say, remember the kitten Nibbles who used to jump up and down and run around like a maniac? Remember that, Nibbles? I remember that, Nibbles. I remember. The wild and crazy kitty Nibbles who would scratch everyone, everything. Okay, I'm sorry, kitty. I'll leave you alone. My bad. This is Nibbles. Nibbles. Nibbles is a very bad kitty. But I'll let the evidence show. The evidence will show. Nibbles is one of the worst kitties that ever kittied. Sorry, it's just true. He's one bad kitty. Christy Smythe? I talked to her the other day. She's good. My girlfriend talks to her every now and then. Thank you, Gabriel. Thank you. I got picks. I got wounds. Nibbles scratching me. Oh, look at that. Double equals right here. Do you see that? Double equals. Right? This is a Boolean, not an assignment. Double equals made all the difference. Now the guy moves around. Motherfucker. 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 You guys can't see some of this, sorry. Yes, I love you. Yes, I do. Yes, I love you. Yes, I do. Boo, boo, boo. Meow, meow, meow. Yes, I do. Yes, I love you. Yes, I do. Okay, no more petting. Okay, fine. Fine, kitty, fine. Watch, I'll turn you around. Same difference. Same difference. She really wants me to leave her alone. Why am I moving? Good question, political discourse news. She is a dumb cat. I totally agree. But she's a vicious killer too. Any mice, any bugs, we're gonna get them. Any toe monsters under the blanket, especially them. Gonna get them all. Who needs a dog in him? get this a little bit better. And this will help me with you. You sleepy kitty? Oh, you sleepy kitty. Wiggles wants me to go to sleep. It's 1 a.m. I think it's time. Right, kitty? Yeah, you want to go to sleep. I know you want to go to sleep. I know. Bedtime, kitty. Bedtime. She keeps flicking her tail. Flick, flick. Flick, flick, flick. I wish Twitter would unban me. drgupta.ai. drgupta.ai. Wow, she's fast asleep. Alright guys, I'm gonna go to sleep. See y'all later. Bye kitty. Bye everyone, thanks for tuning in. See you tomorrow.